being at home tonight. I'm not sure, but at least connecting with me. I really do appreciate it. And if you have questions, I'm happy to do my best to answer them while we're doing the presentation. Let's see, I could get this to work so that I could go backwards and forwards. Here we are. There we go. Okay, so just as a reminder, even if I really represent you in real life for purposes of today's presentation, just treat me like I don't represent you as your attorney. We don't have any attorney-client privilege on this video, and everybody's situation is super different. So if you have a question, we'll try and parse it down to be as kind of generic and general as we can. And I'll do my best to answer your questions, but understanding that the information that you give me in that short time period may not actually be sufficient for me to understand all the facts of whatever it is that's going on. So just like with any other situation, you always want to make sure that you seek appropriate professional advice before you take any actions or decide not to do something. So overall, just nice and general, and we'll do what we can. So I know the main topic is on benefits. I also wanted to talk a little bit about special needs trusts and a little bit about able or stable accounts. And so while we all know it's a super short list with only a few words, probably we could spend, an hour or a day on each one of these topics. So I'm going to do the best that I can on them. So you probably understand there are kind of two categories of public benefit programs. So we have benefit programs that I would say are not means tested, meaning it doesn't really matter how much money you have or what your income is to determine whether you're eligible for those benefits or not. So we often think of Social Security retirement benefits in that way. You pay into the system. When you reach a certain age, you have a right to start basically getting that investment back over some period of time. The longer you wait, the more that you get, assuming that you live long enough to make up the difference for the smaller amount you would have gotten if you took it sooner. Then we have Social Security disability benefits, which are for somebody who worked enough quarters and then became disabled. And so it's kind of like early retirement, and we'll talk about that in a bit. We have Medicare benefits, which are often tied, again, to having a work history or getting Social Security disability benefits or getting something called disabled adult child benefits, which we're also going to discuss. And while we're not going to get into any detail on veterans benefits, of which there are lots of different kinds, if you were injured while you were in service, then you would be entitled to some kind of compensation, again, which has to do with how injured you were, not how much money you have or what your income is. And then we have our means tested and needs-based benefits, which are the things that you guys are typically thinking about as you're trying to support a loved one who may have some kind of a disability that makes it so that they are not able to work a full-time job or maybe not able to work at all. So those we think of as our basic SSI, supplemental security income, which we're going to talk about. Altex, which in lots of states is called Medicaid and is often tied to the DDD benefit, Department of Developmental Disabilities. There are some federal pension benefits and some housing benefits that also have some need and asset and income requirements. And I apologize for my voice. I'm kind of at the end of a cold. I can't remember the last time I had a cold, so I didn't really know what it felt like, and I don't care for it. So hopefully it will totally go away soon. So the first thing I want to say is oftentimes people come to the lawyer's office and all you tell us is that the loved one is getting Social Security. There are lots of different kinds of Social Security, and each one has, as I just said, different eligibility criteria. So if you make an appointment with an attorney, it would be really important if you can get a copy of the verification letter that said, even if it's from this year, you're entitled to this much in SSI, or you're entitled to this much for Social Security disability. That will help the professional to figure out what is the benefit, what do we need to do in order to protect or maximize that benefit. So supplemental security income has a very low asset limit. It's the same as Altex, which is $2,000 of total countable resources, and also has an income limit. For Altex purposes, we have a higher income limit to get benefits. But for SSI, basically the person can have no income or very, very low income. I have no idea who comes up with the strategies to figure out, this is the way we're going to set it up. And I can pretty much guarantee anybody who set up SSI has assets of more than $2,000. Nobody would think that that's sufficient to actually live on. But in any event, that's our asset limit. So unearned income is when the person who's on SSI receives money, but they didn't go to a job in order to get it. So maybe like a gift that somebody gave them. So after the first $20, then it's a dollar for dollar offset. So if you give somebody on SSI, $40 to go to get some clothes at the store and you give them cash, the first $20 doesn't count, but the next $20 is supposed to be reported and will reduce their SSI payment by $20. If they get the full SSI, the break even is about $900. So if they get more than that, they're going to lose their SSI. But we have lots of people who don't get full SSI for a variety of reasons. The other thing is that people think you can't work if you're on SSI, and that's not actually true. Lots of folks are out there working even though they receive some SSI money. So for earned income, they came up with a different calculation, which is, again, the first $20 in a month gets disregarded. Then the next $65 of earnings is disregarded, and then 1/2 of the rest is disregarded. So again, if a person were getting the maximum $914 a month for SSI, they actually could earn about $1,900 a month, and they would hold on to a few dollars of SSI, which we're going to learn in a minute is really important for later benefits and also keeps them categorically eligible for access health insurance. So the person can work. You just have to keep an eye on how much they're working. And Social Security has an app you can put on your phone to report the earnings each and every month, because lots of people pick up some shifts and get less shifts the next month. And so the amount they're earning each month might be very different. So those have to be reported on a monthly basis. If you apply, if you have any income or assets as a parent, and then your child is not going to be eligible, because in order for the kid to be eligible while they're under the age of 18, that means that the parents basically have to qualify for SSI under the same rules. So if you have $5,000 in the bank, then your kid is not going to qualify for SSI prior to age 18. But once the child turns 18 years old, you can apply for SSI. You can call Social Security. You can submit at least the preliminary document for the application online. And the goal would be then for your application to be backdated till as of the kid's birthday. So even if it took them several months to get it right and approve that person, then they should get a back pay amount all the way to the date of the application. But if you apply too early, then they're going to want all of the parents' income and asset information because it's deemed available to the child. And so they're going to get all your information, and then they're just going to deny the person anyway. So again, unless the parent is very indigent, that child's going to be denied for SSI benefits. So I've given you the website, which you can go to. There's no full online application yet, but it gives you a start to put in, name, address, phone number, what's the disability, and as much information as you can. And Social Security may also require that you complete this Form 3368, which is kind of a booklet if you print it out. But it's the opportunity to provide all the information about any doctors that person saw, when they were first diagnosed, any medications they're on, any jobs that they've held, what all their bank accounts are, any sources of income. It's really important when you're applying for SSI to remember, hey, when my kid was born, did grandma and grandpa give them savings bonds, which are often a gift at birth, and you've put them in the safe deposit box and sort of forgot about them for a while? Because the cash value of those savings bonds counts towards that $2,000 limit. So you probably want to try and cash them out in advance and either put them in an ABLE account, which we're going to talk about later on, or get those funds spent so we don't end up with too much in money. You can also call the 800 number or your local Social Security office and tell them that you'd like to set up a time to do the application for SSI benefits. So sometimes what happens is, as part of the application, you are applying also for Social Security disability benefits. And most of the time you're going to get a denial because your loved one has to have worked a certain number of quarters in order to be eligible for disability benefits. And so most of the time when you're applying for SSI, it's because they just turned 18, they're not working, they're not going to be able to be what Social Security calls gainfully employed, which is essentially working kind of minimum wage full-time job without any accommodations. So don't get scared when there's a denial for Social Security disability income. So the three options on an SSI application are: you might get an approval right away, you might get a denial right away, or they may say we need to do some more testing because we're not sure if this person is going to qualify or not, and they'll require that they undergo some vocational testing by Social Security. And so they'll tell you where they want that person to go or give you some choices. If you get a denial, the denial should explain why the person was denied. And if it's medical, because they don't have any assets, you're going to want to really review that closely. And there are firms in town who will review that medical as well. And if they think that that the person should have gotten benefits, they will then appeal that, and then they get a percentage of the back pay, but you don't have any out-of-pocket expenses for that. We don't do that in our firm, but we're happy to refer you to people who might do that. If you're way far off, then obviously that's a different story. I also should say, if you didn't apply when the kid turned 18, that's okay. You can apply anytime you want. It's just that the earlier you apply, the more money that comes in. And there's some rules for to make sure that the person was deemed to be disabled prior to age 22, and your best evidence is that person receiving SSI prior to age 22. So again, I don't know who thought of this horrible concept, but I call it the dreaded ISM, the in-kind maintenance and support. And so those are payments made for food and shelter. So the government believes that somebody should be able to meet all of their food and shelter and other needs on $914 a month. So if somebody else is providing food and shelter, or even a third-party special needs trust is providing the paying for the food and shelter, there can be a reduction of the SSI. Now there's regulations pending that would remove the food category and just have the shelter category. Part of the reason I said your person might not get the full 914 is because if they live at home and they don't pay anything for room and board, then their SSI will be reduced by a third of that maximum 941. So they're going to get closer to about $500 a month instead of the full amount. If you tell Social Security that, oh yes, they pay me $500 or $600 a month every month for all of their food and shelter needs, then they should get the full SSI because they need the whole thing in order to pay for their food and shelter costs. If they use their SSI to pay for food and shelter, then there's also no deduction. So if they're in a placement that they pay a portion of their Social Security as their room and board charge, they should get the full 941. And, maybe in the end, a loss of $300 isn't a big deal, but we want to do everything we can to maximize those benefits. So to go back to my earlier discussion about earned income versus unearned income and the impact on SSI, I just kind of gave you an example of what happens if they earned $1,100 in a month. First 20 is disregarded minus the 65. What's left over divided in half. So if they were getting the 914, it would be reduced by 507. They would still get money for SSI benefits. So we like to encourage people to work, makes people feel useful, and they have a place to go during the day. So you don't have to dissuade your person from working at all in order to maintain some SSI monies. Gifts, as I said, have a dollar for dollar offset after that first $20. So if I give $300 to my niece Marissa, who's on SSI, that counts as 280 against her 914. So I've now given her $300 and the government has reduced her SSI by 280. Well, there's probably a better way to get things that she needs. Maybe we can get her a prepaid debit card that she can't get any cash off of, or buy her something, and then she doesn't get that deduction. Again, unlikely that your folks, if they haven't worked, will get SSDI, but if they're working, they're earning credits towards their own disability and their own retirement. So it's another great thing about having somebody who's out there working, even if they're on benefits. If they're on Social Security disability in the 25th month, regardless of how old they are, they will start Medicare benefits at no cost. So if we have somebody who maybe worked and then had an accident, traumatic brain injury, or something else, they in fact may end up on Medicare even if they're in their 30s. So I've given you some information about how many credits you need. It depends on how old you are, how long it is that you had to work. Working under the table is a really bad plan because you can't ever get disability benefits from Social Security if you didn't pay something in. And unfortunately, we've had some matters, we don't do personal injury work, but where we're setting up the special needs trust. And it turns out that the person worked under the table at a very high wage job for a long time, but now they can only get SSI at $914 a month, where they probably could have gotten $2,500 a month without all the restrictions that SSI has. So they're looking at whether or not the person can be what they call substantially gainfully employed, which again is kind of full-time without accommodation. So if your person works at a place where they get a lot of supervision, but somebody else doing that same job wouldn't have that kind of supervision, that's an accommodation. If they need a lot of extra breaks, that's an accommodation. So they could make more than what Social Security says is the limit if they have these extras, these accommodations that kind of reduce their actual income. Disabled adult child benefits are such a fantastic benefit. And we always hear from parents that they had no idea that this was something that was available. So I kind of alluded to it at the beginning, but if your person is deemed disabled prior to age 22, and again, the best evidence is that they started SSI before they turned 22 years old, when the parent or potentially a grandparent, if the parents are deceased or disabled, when the parent starts to collect Social Security retirement, the child who was on SSI will convert to this disabled adult child benefit and get approximately 50% of the parent's Social Security retirement without reducing the parent's retirement money. Now, there are circumstances where there's a maximum of how much can get paid in Social Security benefits to a household. So the numbers might not be perfect, but they work pretty good in most circumstances. If one parent be retired and the higher wage earner retires second, they will bump up to the higher wage earner's retirement. So remember that as well. And when a parent dies or becomes disabled, the child will then bump up to 75% of that person's Social Security for the rest of their life. And just like disability benefits, on the 25th month after the DAC benefit starts, they will get Medicare, again, regardless of their age, and it should be free, no deductibles and no coinsurance. So it's a phenomenal benefit. We have some parents who just procrastinated and didn't apply for SSI until later, and then they have to go back and show, well, they really were disabled prior to age 22. And as you probably know, that's sometimes really hard to do with a diagnosis like autism, because it means so much. You know, my niece has Down syndrome. Everybody knows what that is. But in lots of other disabilities, it just can mean lots of different things. So applying for SSI prior to age 22 can lead to these phenomenal benefits later on if your child is not able to be self-supporting from a financial standpoint. I'm sure you're all very familiar with Altex and DDD benefits. DDD funds Altex. So if you're the kind of person who only has a support coordinator and you don't get any respite or any attendant care or vocational rehab or any other services, it probably means that your person turned 18 and doesn't meet the financial criteria in order to get Altex benefits. There might be another reason, but that's the one we see the most often. So we have to make sure that they're going to meet the requirements for income and assets in order to get services and not just, be approved for DDD, but not actually get any benefits. You all know Altex offsets care expenses, whether that's in-home care, whether that's at a group home or any other kind of placement or a day program or lots of other services that are provided. So getting Altex is, the key to actually getting some help. The other thing, which I actually learned very recently, is that once somebody is deemed eligible for DDD benefits, it doesn't matter how old they are. So you can have somebody who's 65 and had a developmental disability when they were younger and qualified for DDD. They will stay on the DDD program and not convert to what's called the elderly and disabled program. So when you're looking for a group home, it would always have to be through the DDD program, not through that elderly and disabled program. So once you're in and you've been deemed developmentally disabled, you will stick with DDD services as the service package. So that's kind of my piece on the public benefits that we see questions about most often. I also would say that when a person gets SSI, they're automatically eligible for access health insurance and should be automatically eligible for some food assistance through the SNAP program. So if you are not getting food assistance and your person is on SSI, you should definitely look into that and definitely apply for those benefits because they should be available to anybody who's receiving SSI benefits. So I want to spend a little bit of time talking about special needs trusts. So this can be a really confusing topic. And even though I've been practicing for almost 30 years and about 20 of it in this space and in my own office, because we use words that sound and are the same for lots of different circumstances, it becomes incredibly confusing. So people call them special needs trusts, supplemental care trusts, supplemental needs trusts, discretionary trusts, first party trusts, third party trusts, self-settled trusts. Like, oh my goodness, so many words. What are we talking about? So the main goal of this kind of trust is to make sure that the person can have assets, money or homes or whatever it might be, titled to a trust to make life better, but not have them lose their SSI, Altex, and DDD benefits. That's the entire goal of these trusts. So, I talked about SSIs meant for food and shelter. So the special needs trust is meant to do the stuff that nothing else is. And whether it's what we'll talk about in a minute, whether it's a first party self-settled trust or a third party, something you did as part of your estate plan or should do as part of your estate plan, the whole purpose or the whole way it works is only the trustee has discretion about making distributions. Maybe for your neurotypical kids, you say, well, they get some when they turn 25 and some when they turn 30 and some when they turn 35, or they get all the income when they reach a certain age. And that's what the trust document says. But in order to qualify as a special needs trust and not have the person lose their benefits, only the trustee can have discretion about the timing, the amounts, and what those funds are going to be used for. So if the beneficiary has a mandatory right to benefits to get money, that is not a special needs trust, and all of the money in that trust will be deemed to be available to that beneficiary. What the manual says is whatever they can get whatever they're automatically entitled to counts as a resource, even if they haven't received it yet. So unfortunately, it's a loss of control by the beneficiary. They don't get the right to access that account. Now, you could put funds on a prepaid debit card where there's no cash available, and so they could go get their hair done, buy clothes, whatever, and have it not impact eligibility, but they don't get to decide how much gets on that card. They don't have access to make those transfers. So I'm going to start with our first party special needs trusts. These are the ones that are sometimes called the payback trust or the self-settled trust. And the best way for me to describe this is all of the money in the trust came from the person who is benefiting from the trust. So if I left money outright to Marissa when I die, she's going to need a first party special needs trust to keep her SSI and Altex DDD benefits. That's money that I left directly to her. If I left it in trust for her, well, that's totally different. If heaven forbid your person gets injured, then when the settlement or the jury award comes in, that's that person's money. And so therefore that would have to be funded into a first party special needs trust. This is the kind of trust that says when the beneficiary dies, any state that provided Medicaid benefits has a right to be paid back from money that's left in the trust up to their accounting. I used to say up to the amount that they paid for care, but that's not exactly the right terminology. They keep an accounting of what their per day rate is for what they're spending, regardless of if the service actually costs that much. And so they would get paid back up to that amount. So if there was $20,000 left in a special needs trust at the death of the beneficiary, and only at the death or termination of the trust, not while they're alive and still on benefits, but I used $1 million worth of Medicaid services. Well, Altex can't come after my relatives. All they get is what's in the trust. So they're going to get that $20,000. If I only used $5,000, I got on benefits and I passed away quickly. Well, in that case, if it was only 5,000 is my debt, then the other 15 can get distributed amongst the beneficiaries that are set forth in the trust. For this trust to work, money has to go into it before the person turns 65. So if we have somebody who is in a nursing home and was 70 and they got injured, we can't put that money in this kind of trust without it being deemed a transfer. But we use these a lot for funds from probates or with younger beneficiaries. These have a lot of more complexities for administration. Altex has a budget form. You have to follow your budget. It's for the whole year. They're going to ask for all of the bank statements since the date that the trust was created to make sure that you're using the funds in the way that you said that you were going to use them. You want to keep all receipts so you can back up that, yes, I went to XYZ store and I bought things that benefited this person. No cash distributions. Remember, cash distributions are a dollar for dollar offset for SSI, and cash distributions count as income towards the income limit for Altex benefits. So again, we usually use some kind of a prepaid card where they can't get cash. Sometimes you want to block the food as well, because then that has to be reported. Remember my dreaded ISM slide. So we want to not use the trust when we can for food. But if you have to, it's okay. It's not a dollar for dollar offset. It just reduces that Social Security amount by either the amount that was used for food or shelter or up to a third of that 914. So you just want to have really, really good records with Altex. And I don't know how many times that I need to say it out loud, even to my own clients. When there's money in a special needs trust, you must provide a copy of the trust document to Altex, DDD, and Social Security if they're on those benefits. You have to give them an explanation as to where the money came from and provide them with a statement that shows that the account was opened in the name of the trust. You have to do that when you have a special needs trust, whether it's this kind or the kind we're going to talk about next, which is a third-party trust. So these are our estate planning special needs trusts, for lack of a better words. So when you go to your attorney and say, I have a special needs kid, I want to make sure they don't lose their Altex benefits, what do I do? The answer is they're going to need a special needs trust. It can be funded at any age, doesn't have to be under 65 like the other kind. There's no payback provision for these trusts. So if I said I'm leaving money for Marissa, but when Marissa passes away, it goes to her siblings. It doesn't go back to the state of Arizona Medicaid program. I strongly require or suggest that you do a separate trust document. So you can have this trust as part of your last will and testament. You can have it as a sub-trust of your trust, or you can have it as a separate document. And I really like it as a separate document. First, because it's easy to name that as a beneficiary of life insurance or retirement accounts or whatever. The second thing is, especially if other people want to leave money in their estate plan, they can say, well, it goes to the Marissa Special Needs Trust that Emily set up. They don't have to even do a separate document. They just use the same one that I already put together. And because we have to report it and provide a copy to the agencies, it's so much easier to just send that document than say, it's pages 6 through 8 of my trust. And then they say, well, where's the trust document? You're like, well, it's pages 6 through 8. And they say, well, that's not a trust. That's just language about how to create a trust. So I really, really, really prefer a separate trust document. Plus, maybe you want to have a different trustee over your special needs beneficiary than you do if you're incapacitated, and it gives you that flexibility. So I think that that's the best way to do it. So we're going to move on to special needs or to stable accounts or able accounts for a little bit. Haven't seen any questions, so maybe everybody's so educated that there couldn't possibly be a question, because I'm telling you the answers to all of your questions, or you're going to hold them to the end, and all of that is fine. So we call these able accounts or stable accounts, all means the same thing. If you just Google able accounts, my understanding is you come up with like the Virginia one. It would be best if you just do the one that's in Arizona. Our programs understand what they're looking for. They know what the printouts are going to look like. Altex is going to ask for 12 months worth of bank statements from the time it gets created when it's time for your renewal for Altex benefits. So what the heck is a stable account? So you can establish these before age, as long as they were disabled prior to age 26. I lost my little note, but in about 2 years, that age goes up to age 46. So if somebody got disabled later in life, soon, they'll also be able to fund an able account. You can set it up in any state, but again, you might as well just use the Arizona program. Only one stable account per individual beneficiary. So if you're divorced, you can't set one up and your former spouse set up one. It has to be one for that person. Contributions per year are tied to the gift tax exclusion. So 17,000 in a year. That doesn't mean 17,000 from grandma and 17,000 from grandpa and 17,000 from Aunt Dem. It means 17,000 total in a calendar year. These also have a payback to Medicaid, but unlike our first party special needs trust, where literally you can't touch the money after death, you still pay for funeral expenses and administrative costs. If the person has below $100,000 total assets, they're fine. If it goes above that, their SSI. If they're working, you can make an extra contribution to the ABLE account based on what those wages are. We find them super helpful when the account where the SSI is going in is getting too big. So you want to move some money over into that ABLE or stable account to get that representative payee account down. Money coming out for food and shelter doesn't count as that dreaded ISM, no deduction. So if you buy the groceries from the ABLE account or they pay rent from the ABLE account, there's no issue with that at all. The money grows on a tax-free basis and comes out on a tax-free basis, so that's terrific, but there are no brick and mortar banks. So you have to definitely do everything online. You can also roll a 529 plan into a stable account, again, at that maximum 17,000 a year. So if it turns out that you funded a 529 plan and they're not going to have education expenses, you can roll it into the stable account if you want. And for all tax purposes, we don't have any of that anticipated disbursement budget form with pre-approval. You can use the money for anything that benefits your person. So this is kind of a general list of what they call qualified disability expenses, but it's really anything that helps the person. Anything that's for their benefit is pretty much acceptable. And I don't know what there could possibly be that isn't, but if you took out something that wasn't okay, the penalty is you pay the tax on the growth related to that one distribution. So if you pulled out $100 and you used it wrong, the only penalty that I'm aware of is that you would have to pay the tax on any growth on the 100 that was over and above the principal that went in. It's just so nominal, it's not going to matter. Just remember only 17,000 a year, which with our stable account, it would get rejected as a deposit if somebody tried to put too much in. One thing that happens in Maricopa County and in front of some of the commissioners, if you're applying for guardianship, is if you have a funded ABLE account, they will say that your person is not indigent and you cannot waive the fees for court-appointed counsel and for the filing fee. So lots of people started ABLE accounts right when the kids were diagnosed and they've built up money and they get disappointed that they're going to have to spend a couple thousand of it on those guardianship fees with the court. They're great for small personal injury matters or small inheritances that people get. Again, for that excess Social Security money. And it's also, if you have a fairly high functioning person, it's a great way to help them learn to budget. And what does money mean? You can get a debit card on our stable accounts. And so you could preload it with money and they would understand, oh, I spent all of that money doing X, Y, and Z, and now I don't have any left for the month. Maybe next month, I'll be more conscientious about how quickly I use the money that's on that card. And you can have all of them. You can have a stable account. You can have a first party trust because somebody got money directly. And you can have a third party trust as part of your estate planning documents. And they can still receive SSI and all of the benefits. Again, all of these things need to be reported to the agencies that provide services. For the first party trusts, Altex is going to want your budget every year and is entitled to an accounting because they're the beneficiary at the end. For your third party trusts, which probably aren't going to get funded or have any money in them until you're deceased, but if they do, at the time that there's money in them, then you have to report to Social Security as well as to Altex DDD. The other thing, remember, is that DAC benefit, if you pass away, if you might not have to even report it to Social Security if the money went in and the person wasn't on SSI, or you have a kid who's not on SSI benefits. It obviously doesn't have to be reported to Social Security then. So just remember that your third party trusts are part of your estate plan. Your first party trusts are money that is money that's the kid's money, and it has to include that payback language. And in an ABLE account, anybody can add money, the kid's money or some friend's money or family member money. So I talked about the reporting requirements. I wanted to make sure I stayed on time. I see it's 1:45, so I think we wanted to have a little bit of time for questions. So I am totally open to doing what I can to be helpful.
So if you have a question, feel free to unmute yourself and ask away.
Hello.
Hi, Mary Beth.
I have a question.
Go ahead.
If we have a family trust established and we have a specific special needs trust, which I believe is a third.
I don't know if it's just me, but Mary Beth froze
yes,
on me.
Froze. Yeah, Mary Beth, you froze. We'll come back to you. Don't leave.
our special need kids portion?
So I think what you asked, because you sort of broke up, is you have a family trust, you have a special needs trust for the person who needs benefits. And then in your family trust, it says, 50% to the special needs trust for Emily. That's absolutely perfect. So then your assets that are titled to the trust will end up with whatever percentage needed to go after expenses are paid and final taxes and all that stuff will go into the special needs trust that stands by itself, and the trustee will manage those monies, and it should be just fine where that person will not lose any benefits. That's a great plan.
So
Thank you.
Chris asked in the chat, is there a new AZ Able program that you know of?
So they call it stable. It is not a new program. We've had it for several years. My understanding is that there have been some changes, like with customer service and who the director is now of the stable program. It had started with the folks from Ohio. Ohio State was the first state to get a able accounts up and running. So you go to that same az-able.com website in order to get it set up, which I had up on the screen to show you what to look for so you know you're in the right place. So it's still az-able.com to get there.
Emily, I have a generic question, I guess. So we'll say you have a child and we'll say they're 15. So still, underage. So what happens, we'll say if that child gets into an accident and we know we're going to do a lawsuit and we know they're probably going to get money, but we don't have a trust. We don't have a third party trust. We don't have an ABLE account. Would you suggest doing an ABLE account as long as it's under 100 if they don't have the money to start up a trust right away? Because I know it can be a little bit costly to get, your special needs trust and your family trust where you want it to be. So would that be the most cost-effective way for families to make sure that money is used for the benefit of the child?
Yeah, so that's actually a huge question because my answer is because first of all, if we have a minor or an incapacitated person, any settlement needs to be approved by the probate division in the probate court. So
Okay.
Mom and dad can't just say, oh, sure, that sounds fine. That's not binding on that person. So that's the first bit, is that you're going to be in front of the probate division to get approval on the settlement. You can ask for court permission to put the first 17,000 in the ABLE account. It can grow to 100, but you can only put in 17,000 a calendar year.
Okay.
So if it's a small settlement, less than 17, then yes, putting it in the ABLE account, not doing a full-blown conservatorship, not doing a special needs trust, all of that would make perfect sense.
Okay. So over
Often,
17, then maybe you want to look into the trust and see if you can swing it until the funds come and all of that.
so the first party special needs trust can only be established by a parent, a grandparent, a court, or a guardian, or the person who is disabled, but an adult and still competent.
Okay.
But you would still, unless they're a competent adult who's setting up their own first party special needs trust to receive that injury award money, you're still going to be in front of the court because you can't just appoint yourself as the trustee and you don't get to decide that the money is going to go into the trust.
Okay.
So whether they're 15 or they're 18, if they're incapacitated or disabled, you're still going to need to get probably court approval. If they're under 15 under 18 for sure.
Mm-hmm.
If they're over 18 but they have capacity, well then they could do their own settlement and say that's fine with me, and they could set up their own special needs trust.
Okay.
And you can't ever put that personal injury money into a trust that you did as part of your estate plan. We don't ever put the kids' money in mom and dad's trust, ever, ever, ever.
Good to know. Okay,
Yeah.
so another question from the chat. It says, so if we have an Ohio account, do we transfer it or do they leave it where it's at?
Yeah, you can just leave it right there in Ohio. That's not a problem at all. Lots of people have Ohio stable accounts because, again, that was the first state that opened up. We have clients who have them all over the country. I'm just saying that if you're just going to open one now, you might as well just open the Arizona one. But almost all the state programs allow non-residents to open an ABLE account in their state. So sometimes people have told me that they opened it in a different state because that state doesn't require a payback on the ABLE funds, but the state of Arizona still will. So it doesn't matter that in the other state you wouldn't have to do that.
Okay. Does anybody else have questions?
Yes, I'm Kathy Dugan. I had a couple of questions. We have a child with late diagnosis with autism who's actually 24 now and are in the process of filing for SSI. It's been denied. It's going through an appeal right now. We have a company helping us with that. You mentioned about, if we're supporting them completely financially right now. And, if we are giving them we should be charging them rent, I guess. How do you explain that? If this person is not working at all, how are they paying your rent? I mean, it doesn't make a lot of sense.
So if you are the representative payee, you would have control over that account. And so you can move money each month from their account to your account at the amount that you said you were going to charge for the food and rent. Social Security also has a form. So if your person is competent, they can sign a rental agreement, a room and board agreement with you. Just because they get SSI doesn't mean they don't have capacity to enter into other agreements. And most importantly, you just want to report it to Social Security so they would know food and rent is not being paid by a third party. They're paying their own way. Therefore, they need that maximum SSI payment each and every month. So most of the time, parents have told me when they've done their SSI interview, they just say to the eligibility specialist, they're going to pay me this much each month and I'm moving it over.
Okay, so do you have to set that up in advance? I mean, because we're going through the appeal process and, we don't have any of this in place. It sounds like we need to set up an ABLE account soon. Because we don't have any other benefits like the long-term care benefits. I mean, they were too old by the time, it was determined what the diagnosis even was. I'm kind of confused, as to how much of this has to be set up before you get benefits or, it sounds like what we're doing now probably is not going to work out to maximize, the assistance we might be able to get.
So you don't have to set up a stable account in advance. The person doesn't have any assets. A stable account is used to make sure that they keep their own money below that $2,000 limit, and you can set it up at any time that you want in the future. You can also do some kind of, again, it doesn't have to be anything fancy, but that they've agreed they're going to pay you $500 a month for room and board, and that because they don't have their SSI yet, you're going to get paid from the back pay when they get approved. And therefore, obviously, you're not taking money out, but you're sort of keeping track. So if they get approved later and they get back pay, there's a pot of money to get it from. And so for Social Security purposes, you've said how much it is you were going to charge, when it was going to start, and what the source of the payment is going to be. And so again, if they get the back pay, to sort of reimburse you for the months that you've been waiting to get paid.
Okay, so is it okay at this point in time? I mean, they have their own bank account, which I'm zelling money into to cover bills, and a lot of the bills I'm paying myself. Is that a bad approach? Is that something that's going to affect our future ability to get benefits?
So hold on one second. Oh, I'm so sorry.
Okay.
Okay, so the answer is if the person lives with you, or even if they don't, instead of putting money in their account, I would just pay the expenses directly, because each month that is counted as income to that person by you putting it in the account. So just pay the expenses directly to the provider.
Okay.
That would be my general advice. And one of the people on the chat asked if it's income to the parents. So, I mean, I'm not your tax accountant. I'm not even your lawyer for purposes of tonight. But the general answer is no, because I'm pretty sure that the amount they're paying you is far less than the expenses. So you're offsetting the income with the actual expenses of what their meals are and what it would really cost for them to rent that space. So I've not had an issue where that's a concern at all, where there's income for tax purposes to the parent. One of the questions is, can rent be paid from an ABLE account? Absolutely. That's a great place to pay it from because there isn't an offset. So if people are if they're using their own Social Security money to pay rent, well, they can use their own SSI to pay rent. But if you're paying rent and it went into the ABLE account first, and then you pay the rent from there, there's no deduction for their from their SSI because it's like they paid it because it was part of their own monies. And if you move out of state in the future, do you still have AZ requirement for Medicaid? So if you move out of state, you would have the requirements for the state that you want to apply for benefits. And it's a really good question because there's no reciprocity. Just because you got Medicaid benefits through Altex and DDD in Arizona, if you move to another state, you got to start all over again with your application. And for the most part, the person has to be physically in the state in order to apply for benefits. So sometimes there's a delay in getting health insurance and appropriate housing. And I don't want to take up too much of your time either. So I'm going to rely on you to cut me off when I should stop answering questions or doing whatever.
No,
So.
it is all you, Emily. If you need to leave, please feel free to let us know. We actually have the room until 8. So totally up to you. I don't, again, if you wanted to graciously stay, we would love to have you answer more questions.
So it looks like another question is explain again about the disabled person working and their income into the ABLE account. So the income that the person on SSI receives is income to them. Even if you have it direct deposited to the ABLE account, it's still their income. What I was saying is that if a person works, they can put more into they can put more into the ABLE account. They can earn more money and put that into the ABLE account. And I think the requirement is not only that they're working, but that they are not contributing to a retirement account. So it's a company that doesn't have that, then they can put more money into that ABLE account to kind of make up for that 401k that they don't have at their job. So that's the purpose of what I was talking about over there. Are there other questions for me? I don't see any more in the chat. And I don't see any smiling faces. So I totally get that it's overwhelming and confusing. And like I said, I could probably spend an evening talking about each one of those various topics. Is their income allowed over the 17,000 annual limit? The annual limit is the amount that they can contribute that can be contributed to an ABLE account in a calendar year. The amount of income they can make is the same as I was saying previously. If it's earned income, there's still a limit on how much earned income they can have without losing their SSI. Having said that, Social Security also has work trial periods. And so if somebody's working and they're going to earn too much, you can tell Social Security that you want to try one of the work trial periods, which can last 9 months, because we have lots of kids who are serially employed, right? They have a job for a few months, then they get anxious, they lose it. They have a manager who doesn't understand what their triggers are. Things go south, they're home for a couple months, then they get another job. So part of that work trial period, the purpose is to help people get back to work, but not kick them off of benefits. So even though they might not be receiving any SSI money, they're just in limbo, so to speak. They're suspended. It's not terminated. So if they then aren't working again, they can say, oh, I lost that job. Here's the termination letter. Now I need to start my SSI again. So obviously, like I said before, we all want to work. We all want to be productive. It's good for socialization. It gets people out of the house. So they allow the kids, I call them the kids, they could be any age, right? But they allow the kids to try and work because and of course, the government wants everybody off of as many as possible off of benefits. So when it's suspended, that's less money that's coming out of the taxpayer pocket to fund that SSI payment.
I had a quick question, Emily, if I can. So I feel like you kept reiterating to put it like on a prepaid debit card or something like that rather than give them cash. What is the reasoning behind that?
So if it's their SSI, they can have it in cash. But if you hand them cash, the first $20 is disregarded. Every dollar afterwards should be reported and there's a reduction to SSI.
But not the debit card, that would not be reportable?
So because it's not cash, again, if it's their SSI, it doesn't make any difference.
Yes,
But if they're right, but if you put money on a prepaid debit card and they're using it to buy things, but it's not cash, and they use it and they buy clothes, they go and get their hair done, they buy a pair of eyeglasses, all of that is totally fine.
Okay.
Those aren't problems at all, but cash distributions are a reduction to benefits.
Okay, so cash is bad. Okay.
Cash is imperfect for sure.
Okay.
I'm sure there's a lot of cash going around that nobody says anything about,
Well,
but
yeah,
it is
that's
not
what
the
I'm
way
a
you were
little
supposed to do it.
I guess, and then I mean, is there a way, or have you heard of those stories where people, got caught or, they got looked into? Obviously we all want to do everything on the up and up and make sure that, any monies that our children should be getting goes to them, for because they need it. So have you heard of a lot of horror stories where, maybe, with the best intentions, but they shouldn't have done that?
So if you have reportable income, it will be reported to Social Security. The IRS will tell Social Security. It may take years. You may get the letter 2-3 years after it's happened, and then you get a letter from Social Security that says, hey, we got your tax records, and we see that there was taxable income in the year 2020 of this amount in this month. We need an explanation.
Okay.
Sometimes it's a super easy explanation. It was an investment in a special needs trust that had dividends, or it was cashed out, and so there was some capital gain. That's fine. It stayed in the trust, but that can happen. I'm sure that Social Security somehow does catch people, but I don't know how they would do that with cash, but we all want to do things the right way. It's pretty easy to follow the rules, then you can sleep at night. We all want to be able to wake up in the morning and look ourselves in the eye and say, I did the best that I could.
Yeah.
And if you get the letter that says there's a problem, do not put your head in the sand, because you typically only have 10 days to respond. And if you don't, they will suspend and terminate SSI because they didn't hear from you. So they assume you agreed with them. If you at least respond, then they should keep your person on SSI while they investigate and you get them more information. So for some people, they are functioning enough that they are their own rep payee, and then they get a notice that's a bad notice and they don't tell anybody because they don't know what to do. So it's just really important to understand you have to respond timely and quickly and let them know, I don't agree with you. I want a reconsideration. Put it in writing. Make sure you have receipt that it got there, to make sure that your person will stay on benefits while it gets investigated.
Okay. Sounds good. I'm going to answer. Somebody asked, can we get a copy of the presentation? So if you scroll all the way to the beginning of the chat, there is a link, but it should have also been emailed to you. If you cannot open either one of those, feel free to let me know. So it should be one of the two. Either I emailed it to you, or if you can click on that link in the chat, you should be able to pull the presentation. And any other questions for Miss Emily?
Well, it was definitely my, I don't know, can warrant pay rent to parents from ABLE account? I know you've written that twice, Chris, but I don't know what that means. Do you want to unmute yourself and tell us what the question is?
Can guardianship? Okay.
Warrant, rent. So I guess I'll just make up what I think your question is. So if that's okay, not a problem that you're having trouble with the phone. So you can pay rent from an ABLE account. You can establish an ABLE account if you're the parent or the guardian of the person. You can add money to an ABLE account and from there pay expenses. Other people can add money to the ABLE account. So you can definitely pay rent to a parent from an ABLE account, if that was the question. So, and the source of the money in the ABLE account can be SSI, but it doesn't have to be SSI. And it's the same answer. So again, from the ABLE account, you can pay mom and dad rent for the rent or the food expenses, whether that was SSI money that got deposited or not. So how about if we take one more question and then we'll call it a night?
If I could ask what type of services your firm provides to assist with this type of stuff, because I mean, this is really daunting to somebody new to this and could use all the help we can get.
Yeah, it is very daunting. It's a maze for sure. So if you got the materials, you should have our website, which is kilelawfirm.com, just like my sign, Kile, not Kyle. And so all of our services that we do are on there. Videos that I have done previously are on the website and on our YouTube channel. So we do estate planning and guardianships and conservatorships. And if you get denied for DDD for medical reasons, that's not something we do, but we know lots of resources to help you with that process. We do special needs planning, but just check out our website and you can again see what I hope are good videos and information and resources, and kind of has everything we do. And I have great staff. My legal assistants, Pam, Paisley, and Sarah, are a wealth of information. They're really terrific. So you can always call the office and we'll do our best to be helpful if we can.
Great.
Okay, well, thank you so much, Emily, for joining us this evening and providing us this great information.